I think if you look at something like gold, which is also trading at 6-year highs right now, a lot of the same fundamentals and macro topics that drive the price of gold also drive the price of Bitcoin.
Right.
And so I think it's a similar investor sentiment there.
No, you're totally right. So we look at what would that be? Super low interest rates. Both Europe and the U.S. have come out in the past week and talked about more easing.
Geopolitical risks.
Right. So it basically, to me, would solidify its position as digital gold effectively, right? I mean...
And it would certainly seem, in addition to the Facebook news, it would certainly seem like there are some investors out there that maybe are hedging their bets, seeing it as such.
Yeah.
That makes more sense. In a way, I wanted Libra to be the catalyst because it makes me find comfort in some fundamental reason for it going up. But I understand that it's not actually tied to that, so I can't find comfort there.
Yeah.
Because it makes me nervous when we see these big surges in this currency that so many of us don't really understand, and so few people very likely control.
Yeah, I think we haven't reached, we're certainly nowhere near the late 2017 interest levels, just when it came up everywhere, I remember Thanksgiving dinner.
That's right.
All the talk.
At everybody's family dinners.
Yes, and so my cousins are coming back at the end of August, and if they're talking Bitcoin again, you're going to know.
Yeah.
And
actually,
actually,
Beyond Meat and pot.
Exactly. You're going to know. That's the top. Meantime, Senators Mark Warner and Josh Hawley are introducing a bipartisan bill that would require big tech to put a price on user data and disclose the type of data they collect. I have to mention this, guys, kind of a side note. It's called the Dashboard Act, and that's an acronym. Look what it stands for.
Yes.
Designing accounting safeguards to help broaden oversight and regulations on data.
How many staff hours were devoted by our taxpayer money to come up with that?
A lot.
I mean, they could have. I mean, that is so complicated. Not like a 3-word acronym.
Sounds like a DoD program.
Or just call it, if you want to call it the Dashboard Act, just call it the Dashboard Act. Forget what it even stands for. What is anyway? So that's the name of it. The name of it aside, this would look to actually make companies have to, I guess, publish the value of this information.
Assign value to users' data, then publish that data. I think the SEC would potentially be the one gathering and going through that data. We were having this debate on Squawk Alley earlier today because part of what makes data valuable is not just that which belongs to a single individual, but how it fits into a broader network and all the data, how it comes together and can be read and understood and used. So this seems very complicated and tricky.
That's an interesting point where they disclose, they say, okay, your data's worth X if we have 10,000 users, Y if we have 100,000, Z if we have a million. I mean, what is it really going to tell us?
And I think it's very interesting when you think about consumer behavior when we're giving away something for free. You see a lot of different studies where consumers are actually okay sharing data if they get something they find valuable in return.
Absolutely.
So I think consumers are quite smart. They understand on some level that Facebook and Twitter, they're using my data to make some money, but I'm okay with that because they're providing me a service for free and I find value in that.
Yeah, and how do you determine that? I mean, your data may be worth more than my data because maybe you spend more online, you engage more with friends online. And so, therefore, how do you tease out from a total revenue amortized over the number of users what your data is worth versus mine?
And
therefore,
right?
therefore, if my data is not worth much, I am getting a great value out of that service. Whereas the other person might say, well, then why aren't I getting paid for this?
Yeah, your heavy Facebook user is subsidizing your light Facebook user, so to speak. Also, I just wonder, I guess, finally, Courtney, going back to your point, if people intuitively grasp this is how this works anyway, there's a value that I'm providing just by simply signing up for these platforms. Maybe 10 years ago that wasn't the case, but certainly today.
I think so. I really do.
It's front of mind. Let's talk about your interview this morning with Home Depot CEO Craig Menear, who was on Squawk on the Street. Here's what he had to say about tariffs and how he wants to shield his consumers.
The first step that we'll do is try to protect the customer in the project. We'll do everything we can to try to take other costs out of the business, working with our suppliers, whether that's opportunities in supply chain, other elements of the business. And then we'll try to protect the customer on the project.
And Home Depot has a ton of scale. They can probably do that better than the smaller players.
They do, and they evaluated it recently and said, look, in 2018, tariffs did give us basically $1 billion hit, but they made $108 billion in total, so it's less than 1% of sales. And they said, look, just because one product gets tariffed doesn't mean we're going to raise the price of that product equivalent to that tariff. If it's a very demand elastic item, that's not the product to make up that margin on. Maybe it's something else.
Right.
And then they looked at what happened in washing machines and they said, yes, there was a negative impact at first, but you know what? over time, it's really evened out, and appliances are still quite strong in that category despite the price increases.
Who do we think, if they're handling it this way sort of relatively well, who cannot? Who doesn't have that luxury?
I mean, I think we just keep going back to size, to your first point, Kelly.
Yeah.
If you have scale and you operate a company sort of on a portfolio level, you can look at different categories. Okay, costs went up here, but maybe, you know, I can move them over to this area. If you're a small player or you've got low margin, you're going to be in trouble. So even the smaller hardware players are going to have a harder time. The Ace Values and True Hardwares of the world operate effectively on a franchise model, and those individual shop owners are going to have a much harder time figuring this out. And they've told us as much. When you go back to, you know, a church that sort of ordered, I had this one example where they ordered a bunch of faucets and they were one faucet short, and then when they went back to buy that faucet, it had gone up in price by $100, just that one faucet, because that one hardware store in that town couldn't make up that difference on the tariffs.
And that's not a good look. You don't want the small, the mom and pops, you know, the local players to be the ones who are losing.
Yeah, they don't have leverage against their suppliers, and those are when you look at the polls and surveys of the small business, that's their. It used to be finding employees, right, and right now it's really the tariffs that are a top issue.
Yeah, I mean, small business owners are definitely disproportionately getting hit by something like the tariffs and the added costs versus the bigger players. The fact that the bigger players can go back and renegotiate it within their supply chain. But I think there's another key point in all of this, and that is we continuously hear over and over again that tariffs equal a tax on the consumer. And you know what? It's just not that simple. Yes, there's added costs. It doesn't always trickle out to the consumer.
Yeah, that's why I think earnings season is going to be so interesting.
Well, no, a portion of it does. It's just not entirely the consumer.
It depends.
Or it's a tax on business.
I'm not saying there's not an extra. There's an extra cost, but it's not always directly turning into higher prices for consumers.
That's going to be the most fascinating part to watch in all of this, is where exactly does that squeeze happen, if anywhere. Moving on, delivery startups like Grubhub, DoorDash, and Postmates are under fire now because some of the biggest restaurant operators, the likes of McDonald's and Applebee's, are pushing them to lower fees. This now feels like the maturing of this market, much like Uber and Lyft themselves matured. We all realize, oh, these rides aren't always that cheap, and their business model isn't always that great. What happens now?
This is so tricky. I mean, I think that the revenue you have to generate has to be so much bigger than, of course, the cost of these services. And even if it's this add-on, which when I look at retail, and for a long time I wonder, why doesn't one of these retailers just buy Instacart? Because their model's not that great when it comes to profitability, right? It's easier to use a partner.
Them do it.
You figure it out. And so I think this is a big issue. I don't know what the answer is.
Yeah, it's a bad business. I mean, so you order a $10 sandwich from Panera, right? It's $5 the cost of bringing that sandwich to you, the labor, the gas, the packaging. They charge you $3 flat fee. They are losing $2 on that order. When is that sustainable? And so I think the challenge is to generate higher revenues from each order and figure out how you're going to make money.
So either make like a minimum, threshold, or what I'm worried about, Morgan, too, is, again, that I already pay the $5 for the $10 sandwich or whatever. What's my breaking point? Am I going to pay 20? I mean, in some cases, maybe if it's
most people won't pay more than $5. The surveys show $5 is the breaking point
for any.
I'm not paying $5. You guys are generous.
Well, you're in Manhattan, where they like pay you.
I'm like, what?
Good
No
sushi
way.
in the burger. Totally.
$5? Are you kidding?
Finally, airlines are always looking for ways to get more passengers into their planes. But this may be taking it a little too far. What you're looking at is a photo from Avio Interiors. They're a company that makes airline seats. And they brought this Skyrider to the Paris Air Show. The Skyrider is a bit like a cross between a saddle and a bicycle seat. So you kind of half sit or half lean forward in the chairs.
Giddy up. Saddle class. I saw that in one of the reports, and that got my attention. Apparently, they first proposed this in 2010, and since then they've been rolling out iterations of it, and apparently there's interest, but no orders yet. I can't imagine why. I think it has to do with the fact that these seats are not up to regulation, current aviation regulation code. They're too small.
Are you leaning on them? Are your feet on the ground?
Yeah.
We're all different heights.
Yeah, you're leaning against them. Some of them have a little footrest if you're shorter, or for kids, they have a little footrest on the bottom. It pulls out.
I need a footrest.
Pulls out. I think it looks like a theme park ride.
I know.
I think it looks like fun. It's a roller coaster.
Yes.
So I think kids would love it. And the biggest advantage to this, the reason that they've been trying to sell it, is if you can squeeze a lot of people in the back, that means you can put in more first class and business class seats to get your minimum capacity for the aircraft. And you can make a lot of revenue from selling more of those first class and business seats because you've had a max.
Bad look that is. Oh, if you're in the back.
Well, that's the question. Right.
But if your plane ticket is cheaper and it's like a short flight, maybe you're totally open to it.
I actually